Hello freedom traders, this is your voice Collins FT. So once more again, we're gonna do as usual. We're gonna plunge into the video straight away. So today again, we're gonna do back testing. Back testing, I will repeat again, it's the most important part of trading, and it's exactly the same as trading, except for emotions that you don't have any money in. You didn't put any money any money in. That's the only difference that makes back testing. It's not the same as technical analysis. You just apply your technical analysis to actual trades. So I'm not going to behave like your gurus that will come and dictate. I will come and dictate to you the market and tell you, hey, here the market is it's going to go this way, or it did go this way because of this, because of that. Here you apply it. With backtesting, you apply it straight away. Most often you will see that your gurus, your teachers out there, those who have courses online, they mostly do not teach with backtesting unless they practice before they do it. But guys, we're gonna do it raw. We're gonna be real. If it doesn't go our way, it's part of the game. So um, I'm actually looking for a chubby market so that we do it perfectly and everything should be okay. So let's see. Okay, we're picking New Zealand US dollars, New Zealand dollars, US dollars. So let's see, guys. Let's pick anywhere, and even we should be pulling it and not looking. Shouldn't be seeing. Yeah, okay, so this area we didn't see anything here, so we don't know. Let's pull again. Let's pull again. Let's pull again. Yeah, so we don't know anything, we didn't see anything. Then let's do it. Okay, so now we can pull up. So we didn't know exactly what was going on here. So this was back in 1988. Wow, this was far back. Anyways, the market has always been the same, except for some slight changes, but it's still the same. So here, first thing as usual, guys, we'll look at the market structure. I don't know, the candlesticks these years are a little bit different. I don't know if it's because of the epoch. I don't think I've ever back tested until 1988 or something, but anyways, we are there already. So let's go to the daily. Oops, what did I choose? So candlesticks. What the hell was that? We go to weekly. Okay, I thought these are Aikanachi candles, but it's regular Japanese candlesticks. Well, let's see what happens with these days. Okay, we'll look at the structure, same as usual. uh, this was a kind of a break of the uptrend. So guys, as you can see, I'm putting my trend lines, my key levels. As I say, these are my guards. These are what actually determines any trade. So you cannot trade without this, because you need to know when to go out, you need to know when to enter, and you need to know if you are to enter or not. You have to wait, or you can execute immediately? Do you have to put a buy stop or a buy limit? Do you have to put do you have to go market execution right away? So these levels, the support and resistance, the trend lines, the market structure, those are the key levels. Those are the main principles of technical analysis, and I go by them. I don't add indicators. Most people, they do trade with indicators, but I don't trade with indicators. I did trade with indicators for about 2 years. They were not helping me at all until I decided to go price action, full swing. So this is it, guys. So what happens is we're gonna wait for the market to hit this level. We'll see its reaction before we decide if we're gonna enter, buy or sell. So let's check it out. Okay, so the market gave us a reversal signal here, like it's about to come back. We're gonna wait for confirmation. Okay, so you see, if we did enter here and put our stop loss maybe behind here, I mean above this area, this is what would have happened. Would have been in profit for some time, then got kicked out. That's why you see there is signal, you wait. And we knew, as I said, the reason why I put these levels is because they determine whether they determine where the market is going to and what the market is going to do. So right now the market gave me this reversal signal here, but I couldn't do anything. I couldn't enter a trade. Why? Because I know the market has not hit this level yet, and it's too early to get such a reversal signal. So there was something weird. That's why I just said that's just a reversal signal, but it's not confirmation. So because still yet the market has to hit this level of resistance before we know what we're going to do next. So it has hit, it didn't reject. Let's see if it rejected. Oh, okay. Okay, this was a big bearish momentum candle, which is also an engulfing candle. So it's a clear signal of it's a clear sell signal. Though the market is acting weird, but we still got to trade. But this is not a good trade, guys, because the stop loss is too big. You can see the stop loss is bigger than the take profit, so it's not a good trade at all. It's not advisable. And moreover, at this time the market was behaving very, very funny. So I don't know why it did like that, but it's due to fundamentals for sure. It's probably due to fundamentals. So with this one, we cannot scale down to 50 minutes to look for an entry because we are backtesting and it's not a pro account. So we can only end at the daily and check out what actually went on. But at this time the candlesticks, I don't know why the candlesticks do show that way. I'll do research about that later, but right now, as I said, it's a very risky trade. So sell stop, this white line is for the sell stop. You don't do market execution. You can do market execution if you can go down to the 50 minutes, but if not, you just put your sell stop and observe. So right now, since we cannot go down to the 50 minutes, we stick to our sell stop at this level here, 0.6244. We stick to that and we wait. So whatever the market is doing up there is none of our business. And with this one should be the smallest lot size you can, because the stop loss is quite huge. I don't want us to get greedy and start looking right down here for a possible take profit. to compensate our stop loss, which is huge. That is what some people do. Some people, when they lose, I do that also. Before, when I was putting a lot of loss, the stop loss, when I was losing money, I would be like, okay, let me put a longer take profit so that I compensate for the money I lost. Meanwhile, the market doesn't work that way. The market doesn't care if you are losing money or not. Actually, it's there to take your money. So let's see what happens, guys. So remember, the trade is not triggered yet. It's not yet triggered. Okay, now it triggered. Okay, so we are in profit, but as I said, guys, when even though the market hasn't hit it trigger, we are in profit right now. We were about say 35 pips or like 40 pips in profits before the market giving us this dumbass hammer here, like it wants to go back again. But what I suggest is we know the market, when it's coming down like this, it must hit here before doing anything. But if you want, you can take out your profit at maybe 20 pips or whatever. Yeah, if you are very careful. But if you want to hold on, you can still hold on. So I want to take, because of this candle I just put on an arrow too, because that candle stick is not, it's not a good one there. So let's see what the market will do when it touches when it reaches here, when it reaches this level. Let's see what it's gonna do. Okay, so we are on drawdown, the again back in profit. So it actually went back and retested the level, because it did break out at the level. We did put our stop loss at the key level. It did break, went back, retested. So again, we are in profit. So for those who did go out here when they saw this candle, you might have also enter there, or you can still re-enter here. But the thing is, your stop loss now should be, or whatever, like if your stop loss was here, now we can bring it down here. Yeah, we have all the rights now to bring our stop loss down here. If we get hit here, no problem. At least we saw some profit and we decided to hold, or we took out a little bit and we re-entered. It's gonna be like a break even. Okay, so there was a jump. So guys, the market went back, tried to hit our stop loss. So this is the good thing, because if your stop loss was very huge right up here, when the market started, when you started seeing red, you kind of start to tremble and be afraid, like, hey, if the market is going red, how much am I going to lose? You'll be looking at this big ass amount that you're going to lose. But if it's just a small lot size, I mean a small stop loss like this one, you'll be like, no issue. Even if I lose that one, I can still re-enter. You can lose, you can get hit here like 3 times, you still re-enter, and until you get your market, I mean your setup done. So we are still safe. We are now in huge profit, and the market keeps on respecting us. You see, it's jumping. The market was acting very funny in those years. This is 1989. But the good thing is, that is the beauty of trading. Whatever happened at that time has not changed. it hasn't changed at all. We are still having a strategy that I developed this year 2023. It's working back then in 1989. So this is the beauty of trading. There is nothing new in the market. Nothing new. If it's new, it's just slightly, like we saw the candlesticks when we are going at the at the daily. The candlesticks, they kind of look weird, and as you can see here, these candlesticks, they don't look actually, or the market movement is not like right now, but still yet at the end of the day, we are in profits, guys. Our strategy is working, so uh, it's not a bad thing. Right now we are already in huge profit. We are already in like yeah, exactly 80, like 80 pips in profit. So, and that's it, guys. As I said, uh, when it breaks, it has to hit here. It has to hit the key levels. The key levels, very important. You don't joke with them. So I was talking about being greedy, and it's for a good reason, because this was a big ass bearish engulfing candle here, and it was saying something. So this was for us to be safe. And this other level, you have to watch carefully where I'm keeping my levels. There is a reason why I didn't keep it here, but I did keep it here. There is a reason for that, and it's the same as I can still keep here, and yet I know it's gonna reach, the market is gonna reach. Yeah, it's gonna behave funny around this area, but at the end of the day, it's coming down here. So we hit our take profit, the first take profit, and we are moving forward. So as you can see, we could call this the second take profit. Yeah, this is huge, guys. It's almost 100 pips, so it's also a big one here, and it did hit. Now it's coming back. So at this point, you can, whosoever is going to be too much greedy and wait for the market to hit here, it's not like it's up to you. But at this point, we are already at the, let's say, 6244, 300, 400. We are kind of like 500 pips in profits already, guys. So this is 500 pips in profit already. Well, this is with the weekly, so it's a lot of time, also it's a lot of weeks also, but this same strategy will work in the 15 minutes, in the 1 hour, 4 hours. So it's a good thing. So this is for institutional traders. I mean, those who put a trade and wait for 6 months for it to yield. So as I said, this was the right time to get out. The way the market behaved here, I said it's gonna behave funny here, so it's doing exactly that. So it's time to get out here, and now we just want to see what the market is gonna do next. So it went back to, always it will go back and retest the moving average. The moving average is it's, let's say, a motion resistance. So it's a kind of a moving resistance. Yeah, so the another name I can give for a moving average is a moving resistance and support. So it's a moving resistance and support. So the market is going back now to retest the resistance here. It's acting as a resistance, and when the market is trading above it, it will be acting as a support. That is the role of the moving average. So the market went back after hitting this level. As I said, there is a reason why I put one level here and I put here. So, and I said the market is gonna reach here and behave funny. It's exactly what it did. It hit this one, went back, retested the moving resistance or the moving average. Then it will either come back here and crush, or behave a little bit funny here, or even break, go up. Whatever it does, we just observe, and we know here we are already out. What we are looking for is another sell, hoping the market is going to finally reach this level. So some people will say, hold, bring now your stop loss in profit and keep it here. Why would I have to wait for the market to reach here, right here, and then I bring my stop loss, keep here, and then get hit here? So why would I have to do that? I better get out here and wait for another entry, then I re-enter. Especially if you are on the charts every day. If you are not a 9 to 5 uh, employee, then if you are full-time day trader, it's a good one for you. So it gave us a signal to re-enter. So as I say, it's always a signal first before a confirmation. So at this point, there is no main key level. The key level has just been formed, but not really a good one that we can count on. So the market gave us two sell signals. This one, it gave us this one, and this one. So those are two sell signals. So I could have sold here, then keep my stop loss now above here, which is a very small one. Like in every circumstances, we are not losing that much. We have less to lose here, guys. So you bring your stop loss, you keep it here, because still we are still counting on the market to respect itself, calm down and hit here. And this is a little bit greedy of us, but it is what it is. We are losing, we have less to lose, very small to lose here, so it's no big deal. If we lost this, then we can stay out of the setup. We can say the setup is exhausted, and we go looking for a different setup, or we can try the third time again. So that's how you do it. So we got hit. That's it. So the way the market is going up, you don't wanna look for selling again. You maybe want to buy the way it did hit this level, but it rejected and jumped, because as you can see the market was jumping here. This jumping is very bad when you are losing, and it's very good when you are making, when it's in your favor. So it jumped here, didn't do anything to respect or give us a reason why it jumped. So it just jumped, and there's nothing we can do about it. So unless we wait and see how it's gonna behave. Now this one is a level. So okay, this was another one, guys. So this, the most essential thing is looking at these key signals. So right now we're not doing anything again. We're just kind of like just looking at the market doing its thing. But in normal circumstances, while trading, you look at things like this. When you see something like this, um, and this one, this also, it was a sell. But as I said, we were already exhausted as we got hit here. There is no need to further you just better the trade, the setup is exhausted. First we wanted to take our profit here, and then we got a little bit greedy. We got also our profit increased to this level, so we got out here, tried to re-enter. we were in profit for a little bit, say just about that was about 100 pips, by the way. And then the market went back and hit us out. So that's it. That's a good one. We look for a different pair and we continue trading. So the setup is exhausted already. So thank you guys. Make sure you follow, you like, and you subscribe, and you can even share and come back every day. I do upload videos like this every single day. So thank you guys.